Thanks, Jay. So just a reminder, I'd like to invite your questions using the Q&A function. We've had a few already, but if you have others, please type your questions in. I'll introduce you, put them to Jay and Chris yourself. So if I can start with Steve, who has, I think, 3 questions.
Great.
Cool.
Steve, you're on.
Yep. Okay, cool. I've got 3 questions. So first question is on specifically second half delivery in terms of converting the order backlog. Just in terms of confidence that you can deliver that business, bearing in mind you're a July year end and we're now sort of in March. I guess I'm referencing 1, the headcount that you have and put in place. 2, if you look at your chart about quarterly revenues in the third quarter of 20, you did what looks like 35 to 40 million of revenues in that quarter anyway, so you can deliver. I'd like some color on that against expectations in the market. And then thirdly, any reference to trading that you've got for the second half to date, i.e. February, March, visibility there in terms of execution. Second question is second half PPP forgiveness, confidence there, and again referencing perhaps the 0.8 million in the first half that you did deliver, and why that should give you confidence. And then third, a general comment on the demise of third-party cookies, specifically, I guess, in relation to data transformation and potentially Connect. Thank you.
Okay, thanks, Steve. I'll start with your first one, which was around delivery of that backlog. As it also addresses the second question. So as we said in the update to the outlook, trading is in line with the expectations we have for the second half, and we have high expectations for the second half. So you can take from that we've been able to hire and staff in anticipation of that and beginning to deliver on that larger second half. We also noted in the presentation we've hired 100 people since November. So those 100 people are delivering on that existing demand already. We've got a pretty significant focus, and we've made investments going back to that time on our recruiting engine and our people attraction. That's obviously going to be key to continue. So we are well on our way. We certainly have more work to do, and that work for Q4, it will be more work than there is in Q3 as the trend continues. But we're well on our way. Jay, I don't know if there's anything you want to add on the recruiting front.
No, I would just add that month over month since November, the number of kin that we're adding has been steadily increasing. So we're seeing the number of kin that we're bringing on board increase in line with the need to fulfill the demand. So those curves are matching at the moment, which underpins our confidence to meet the second half execution. Actually, I guess, Chris, do you want to touch on the PPP timing, and then I can talk about cookies?
Yeah, you bet. So yeah, this PPP loan engagement with the U.S. government has been interesting. When we applied for forgiveness originally, due to the requirements of the program, we had to do so under our 2 separate legal entities in the U.S. And as such, one of them has been forgiven in full. That's the 800,000 pounds that we highlighted that's been forgiven. The second request is still under review by the U.S. government as expected, because it's a larger loan than the first. So we can't get any direct response from the U.S. government. As you might imagine, there's hundreds of thousands of requests in, but we can see what's happening, across the field of other companies that have done so, and they are moving. They are being reviewed. They are being processed. So we're in line. We know that we're in line, and the forgiveness of the first gives me a bit more confidence in the processing in time of the second, but it is still an unknown. We anticipate it's going to be in H2, There's no reason for us to believe, there's no fact out there or trend that says it wouldn't be in H2. So that is my expectation, but it is a bit unknown for now on the specific timing. But nothing has changed in the expectation that it will be coming from our perspective.
And then Steve, your question on third-party cookies, it doesn't really have an impact on our business. So as you might remember, most of the performance marketing areas of our business, we've either spun down or sold off at this point. So so there's not a strong amount of campaign-based work that we do that would be impacted by some of the changes being made at Google and otherwise. So we're not anticipating that to have any impact on our business at all.
Could it be a positive though, in terms of people's requirements for first-party data and updating marketing platforms?
It may. I mean, there's a chance that some of those ad budgets would filter more into marketing technology transformation or overall customer experience transformation, but I think it's a little early to trumpet that at this point.
So I think our next question is from Malcolm Morgan, who has two questions, one of which might actually have been covered, but Malcolm, over to you.
Malcolm, you're on mute.
Am I on mute now?
We can hear you.
That's grand. Yes, actually, if I could have sneaky three questions, that'd be very kind. I just wanted, on the point of recruitment, I mean, Steve's question substantially covered it, but I just wanted to know, perhaps more broadly, the state of the employment market for the types of people you're looking to recruit. Obviously, you've had a near-term need, but there's also expansion into 22. So I just wanted to know whether is this a very inflationary market, or are the demand for the sort of staff you're after such that you're facing quite an inflationary environment, or is the state of the US economy or where you're looking to recruit them sufficiently weak that you're getting great, you're not facing that pressure? So that was number one. The second question, I wanted to understand that you did the really useful graph, I think it's on, is it page 7, for showing pipeline? And I just wanted to make sure I understood the right way I should interpret that dip in pipeline between conversion to backlog and versus, has there been a surge of demand, but actually it's tapering off? How do I look at that graph and think about H1 next year in terms of potential growth? And then my final question, which I, if I could ask, is just on page 4. You very usefully described the 5 key areas under what we do. Could you give just even a cursory scaling of the relative importance in terms of revenue from those 5 particular areas? Are they all equally weighted, or is there a dominant and a more modest sector? Thank you.
Yeah, I can start here, Malcolm, and then Chris, please chime in. So first, on the recruitment front, are we seeing some inflation in terms of salaries? I would say slightly, but not dramatically different than what we've seen in the past. It's a kind of a part of our business model, and historically we've been able to raise rates in line with wage inflation, and we're expecting that trend to continue. So not anticipating any margin pressure from that standpoint. As we ramp up, there's obviously a little bit of additional investment in terms of bringing somebody on, versus kind of a steady state of them running and the profitability of at the resource level. But that's just more of a function of scaling. But in terms of overarching wage inflation, we would expect it to continue to some degree, and we would expect our bill rates to increase in line with that. In terms of the pipeline graph, and I'll go back to sharing my screen for a second, so everyone understands maybe what you're referring to. So I'm anticipating, Malcolm, that you're talking about this kind of dip right here.
Yeah, exactly.
Yeah, and that's a good dip. So that dip is where we saw pipeline convert to backlog. So work moving out of the pipeline because now it's contracted and we're executing on it. And then you see, some level of pipeline recovery after that point. So the fact that we still see pipeline after even that conversion higher than it's been for the last year is kind of the leading indicator for continued momentum going into the next fiscal year. So that's why we're feeling pretty good about the position of both the backlog and the pipeline at this point. Chris, anything else you would add on those 2 points before I flip to answer the third question?
No, I think you covered it. And
then Malcolm, your third question, was it around this slide?
Yeah, exactly. Yes.
Yeah. And in terms of, I'll give you rough breakdowns of revenue across these different service offerings, but it's relatively consistent. So business model transformation is, a new product, a new service development is roughly, here, let me bring up the numbers here. You can kind of see the breakdown at the bottom of the screen here. So roughly 25% experience transformation. So this is our e-commerce implementation and digital experience platform implementations, around 20%. And then tech transformation, which is a lot of cloud modernization work, about 20%. And then data transformation has been increased from roughly 5 to 10. So and DigOps sits around 10, and we want to see that number grow as well. And the ventures, as Chris mentioned, is kind of hovering around 15. So these are all kind of circa numbers because as projects kind of come in and out, these things will change a bit. But I would say all of these areas are opportunities for growth for us. The data transformation area is the newest area. As we kind of mentioned, we've formalized that with our Kin Carta Data Labs proposition, which unlocks a new buyer for us, which is that chief data officer or chief analytics officer, depending on how an organization structures itself. But that is probably the newest area of growth for us, and also an area where we see more significant digital transformation and investment dollars flowing. And if you think about kind of the path that a client will go down as it embarks on a digital transformation, it typically will start at this business model or experience layer. So either they're looking to launch, a new tangential or digitally driven product or service, or they want to upgrade their customer experience. And that's typically where these transformations start. And then as they kind of get through, some of the low-hanging fruit there, the technology transformation usually kicks in because a lot of the legacy systems in these companies will be an inhibitor to further innovation or further growth. And so then they have to kind of bite the bullet and say, okay, we've got to modernize some of these legacy mainframe apps that we're running on, or monolithic platforms that we put 20 years ago in order to unlock that next wave. And so that's usually the next layer of transformation. And then, then the data becomes a constraint. And the opportunities to look at data as an asset and use their data as a means to either hyper personalize or create new product or service lines. So, that's not every business, but that's typically the path that we see our clients going down. And so now some of our more digitally mature customers are tackling that data opportunity. And a lot of this just aligns with the maturity of the cloud and the maturity of a lot of these data technologies or data platforms. So we're really excited about the timing of launching this capability. And so we look at that as another new growth area for us that, frankly didn't even exist a year ago. So very excited about that. I think
Okay, thank you.
Yeah, those questions. Ellie, back to you.
Thanks very much, Jay. So the next question comes from Fiona Orford Williams at Edison.
Good morning. Just following on from Malcolm, I'm going to sneak an extra one. Really interesting the way you just talked through the business aspect. Is there any material difference in the margin that you're earning from the different parts of those business? And then I wanted to ask you about what you're seeing in terms of vendor price expectations on the areas you're looking to infill geographically and by capability. And one other question on personnel and recruitment. The other aspect of a hot market is high levels of churn. What are your experiences there?
Why don't I start with the first one, Jay, and then you can add color and maybe take the others. Thanks for the question. Your question on margin differences among the experiences Jay just and the transformations Jay just walked through, very little margin difference among them. What you will see is some of the more legacy or older tech focused things could have a lower price point than our newer offerings, in particular data. So it could have a lower price point, but over time we also use more nearshore delivery, such that our margin on that lower price is still the same or sometimes better. So we get a different mix shift of how we service some of that more legacy focused offerings that we do, but more and more of our business and certainly our growth is on the newer end. And then you had a second question about vendor price expectations. Yep. Actually, could you expand on what you mean by that? If it's different than the talent and recruiting side.
Yeah, no, I meant for acquisitions, what people are looking for.
Yeah.
Yeah. On the acquisition side, we just bought Cascade Data Labs in December. In fact, it was late December. But when we did it, we got it at 4 times EBITDA initial consideration, and certainly they have an earnout, and if they achieve the total earnout, it's going to be somewhere near 6 times. Now that's a bit of a value deal. I think that was a bit specific to them and where they were in their journey and what we had to offer. And I'm certainly not expecting the next couple deals to be in that range, but it just does show you there are still reasonable deals to be had out there. But no, our more realistic expectations are more along the Spire lines, which was in the 7, 8, maybe 8, 9 times from here. And then of course depends on the size and the specifics. And the larger the deal, the little bit more expensive we would expect to pay. Yeah.
Okay. Thank you.
Yeah. And then Fiona, we're seeing our attrition rates hold steady in line with market. I mean, market attrition in our sector is roughly 20%.
Yeah.
So we kind of factor that into our hiring plans as we continue to scale.
Okay, brilliant. Thank you.
And now we have 3 questions from Johnathan Barrett at Panmure.
Hi, Jonathan.
Morning, chaps. Yeah, I said 3. I might end up slightly more, slightly less, depending on how you answer them. But just first of all, on the data labs business, can you just talk us through the likely scale of that business going forward? I want to understand if it's contingent on perhaps other elements of the offer, or whether we should see it as a more separate offer that could grow rapidly and perhaps faster than the rest of the business. And then the second question is really around ventures. Obviously, it's picking up at the moment. Is that business becoming more relevant to your future now? Is that perhaps something you might end up keeping long term? Just if you could just explore that for us. And then thirdly, and I'll keep it to 3. Obviously, you give us the pipeline chart. Is there a bookings chart knocking around in the background that we can see, or perhaps some hard numbers you can put to that just to give us an idea of what those figures actually look like, please. Thank you.
Yeah, I'll pick up the latter first, Jonathan. Just knock that out. So obviously, we're providing the shape of the pipeline that turns into orders, and orders are part of backlog. So when we talk about backlog and where that sits, that's a I would argue a more complete picture than just the orders that we happen to pick up in the period. And then of course Jay provides color specifically on some of the key wins with the names of the clients that we've won in the period. So that's the color we provide. There isn't an additional detail in the appendix or anywhere else that I could point to at the moment anyway. Should we do a capital markets day or something later in the year, which we're considering? At that point, maybe we'll talk a little bit more about the backlog and some of the depth of the backlog or shape of the backlog in specific orders that have come into it. So maybe more to come there later in the year. We will keep you posted on that front. Jay, you want to take the scale of the data business potentially? And I will say, one key there before I hand it to Jay is, talk about an immediate plug-in to our platform of taking the existing Cascade Data Labs business, plugging it in to our existing client base. That's the first fertile ground that we're going to go to, but I'll let Jay give you the more expansive answer.
That's right. I think if it didn't come across in the presentation, the launch of Kin Carta Data Labs on the heels of the acquisition of Cascade is an example of what the type of things we want to continue to do in the future. So as we kind of expand both geographically and across capabilities to increase not just the number of clients, but the services that we can offer our existing clients. Both of those are avenues for growth. So the scale of the Data Labs business, as I kind of mentioned, it was, it's roughly 10% of our net revenue. So, think 100, 150 folks in that practice today. Do we expect the growth of that to outpace other areas of the business? I would say probably slightly. So, I mean, it's 10% of the business today. I could see that getting to a similar realm of, being 20% over the course of the next year or so. A lot of it just depends on the timing of different programs and where clients are looking to invest next. So it's hard to predict it exactly, but I would say, given the newness of that and the traction we're seeing in the market around data transformation, that we would expect that to continue to grow at a good clip. And on the venture side, are we, do we see an opportunity for us to keep those businesses? Possibly. They are complementary. Both Insight and Edit do provide services that we utilize when we kind of put together these transformation programs for our clients. Insight provides market research, which is very valuable to our advise pillar at the front end of these engagements. And Edit has a strong customer data practice kind of built into its business model, which we tap into quite a bit on our different engagements. But the test from my perspective is, can those ventures grow at the same rate as the rest of the business? And I think that's an important test. And if we find that, and right now they're performing well and they are profitable and they are growing, if we see the same traction in those businesses as the rest of the platform, then we would most likely keep them for the medium or longer term, or integrate them. But if we don't see that, then they very well may have a better home elsewhere. So that's kind of how we're looking at it. We're not in a hurry to sell them. They're increasing in value, now that they're restructured and growing. And so we'll continue to keep those under review.
Thank you.
We have no more questions, Jay. So unless anyone would like to add a question now, it would be time to make your closing remarks.
Okay, I think we're just about at time. Again, appreciate you all tuning in. Hopefully you got a picture of where we are. Very pleased with the pace of the recovery and the momentum and the demand we see in front of us, and very proud of the fact that our team has balanced the social responsibility side of our business as we've recovered and scaled. It's easy to put those things to the side when a firm is under pressure, but we've kept that central. And I think that, combined with the investment that we've made in our clients during their difficult time periods, have both been accelerators for our growth and our unique positioning. So we will continue to keep you updated, and thanks for tuning in.
Thanks, everyone.